Hi everyone. I hope you're enjoying your first day at MPE. I know this is a late session, but I'm looking forward to have you engage with us and the amazing team of panelists. I'm Viviane Giglio. I lead the regulatory research team at Vixio, the leading provider of regulatory intelligence for payments and gambling industry. In the next hour, I will be facilitating the conversation we will have around challenges facing merchants when it comes to regulatory changes. As you can see from the panel's title, we are hoping the debate and conversation will inspire you to take action and get more involved in influencing the regulatory agenda for your business as a merchant. I'm going to kick us off with the obvious topic on everyone's mind, which is PSD3, strong customer authentication, buy now, pay later, and crypto asset regulations. Before we start, I would like to introduce the amazing team of panelists joining us today. So panel, over to you. I think you just have to come here. Sorry, yeah. Cool. Feel free to sit, whatever works better. All right, thank you.
Ask you the first question.
Matthias, over to you for introduction, for introducing yourself.
Hello, everyone. Good afternoon. I'm Matthias Terlau. I'm a lawyer at GÖRG, a law firm, a national law firm in Germany, and I'm working in the payment sector for more than 20 years now. I've been working on various issues, credit cards, mobile payments, whatever came up during the last 20 years, and did a lot of publications on PSD1, PSD2, and speeches, and so that's my background, and happy to be here. Thanks.
Hi, I'm Ghela Boskovich. I'm the head of UK and Europe for the Financial Data and Technology Association. We represent practitioners of open banking that are actively in the market or under PSD2 regulations. But I am a regulatory economist and have been swimming in the regulation and compliance space for banking for a number of years now. But a lot of what I'm going to be talking about is the delivery of PSD2, what we've seen in the open banking market. And my response will be very much coming from those fintech providers, their point of view, to give you an idea of what we've been dealing with since PSD2 went live and trying to deliver on it.
Thank you.
I'm Paul Rodgers. I chair an organization called Vendorcom. It brings together the key players in the merchant payments ecosystem, looking at all payment types, all payment channels, all merchant market sectors, and the key issues that underpin those. And really, one of the key areas that drives the direction and the pace of change more than any other is regulation. And I'm very, very determined to do whatever we possibly can to bring regulators closer to what's going on in the merchant payments ecosystem, because without it, we're in a very difficult place.
I'm Andrew Edem. I'm from PPRO. We are a global payments infrastructure provider. We serve some of the largest payment businesses on Earth, and in Europe, we are regulated as a payment institution. So I'm super happy to be here and to discuss the implications of regulation in Europe on our customers and their customers.
Hi, I'm Robbie Doherty. I'm Director of Product and Scheme Compliance at AIB Merchant Services. We're one of the largest e-commerce acquirers in Europe. We're obviously, from an Irish perspective, we've just come through PSD2, and I think the way PSD2 was interpreted by some of the Irish banks was maybe different in some other parts of Europe. Really good learnings in PSD2, and let's hope they're taken into PSD3. But there's no doubt compliance, whether it's scheme or regulatory, it's at the point where it's almost preventing payment companies from moving on, because they're spending so much time just to remain compliant. The ability to do new things is becoming more and more difficult.
Cool. Thanks for your introduction. So I guess just starting with the first point for discussion. So back in September, Vixio hosted a webinar on how to prepare for PSD3. And the key finding was that while PSD2 was certainly a game changer for competition, there are shortcomings in the regulation, achieving its full potential, including facilitating accounts to account. As we know, PSD2 is applied differently across countries, and fintechs were held back by complex and legacy processes within banks, and banks associations feel that Europe isn't doing enough to promote innovation. All these things lead to less effective outcome than originally expected. Matthias, would you agree with the assessment?
There has been a lot of inconsistency between the European states, between the European jurisdictions with respect to especially open banking and the different standards of APIs that are used within the banking industry. So German open banking providers have obviously complained about getting access to banks in France, in Spain, in RISE jurisdictions. So that's sort of the difficulty that has been encountered in within PSD2. Obviously, the regulation, the directive didn't provide for a uniform API specification. That was left to the industry. And that may be one of the difficulties that may have to be repaired now.
Yeah, no, it's a good point. I think in terms of fixes, right, things that PSD3 needs to improve on the regulation. So what fix does PSD3 need to deliver in order to facilitate accounts-to-account transactions and also the payments adoption across the merchant ecosystem? So, yeah, go ahead, Ghela.
Well, Matthias is right. The fact that there is no single standard, a pan-European standard, is one of the challenges. Rather, banks have built to specification, and specifications can be interpreted very, very differently per institution, which means there is a lack of connectivity. So in the PSD2 review, which is closed in terms of all of our answers have been submitted, and the Commission and the EBA are reviewing those answers, as well as the recommendations that have been provided by industry and the EBA. There is a recognition that this specification approach has been one of the major hurdles. And the Commission has acknowledged that APIs are the royal route forward, but they've also looked outside of Europe and have seen examples from different jurisdictions where delivery has been much more unified and there has been a single standard selected. The UK is a really good example. There was a single standard, it's the open banking standard provided by the Open Banking Implementation Entity. And all of the banks that are required to comply to this, there are 9 of them in particular, had to build to a standard. That the standard performance and conformance was measured. So there is an actual track of how well a bank stands up a well-functioning API. Because everything that you do in terms of accepting, processing, settling payments is dependent upon speed and dependent upon those 2 API endpoints connecting. And if you cannot measure the performance and do incremental improvements as the standard evolves, you don't have live connectivity. You don't have any data sets that are being exchanged. You have a dead system. In Brazil, they have an open banking standard that has been selected. All of the banks are also required to build to that particular standard. And the fact that there is a fraction, we've discussed this all day, that the market in EU or Europe economic area is pretty fractured because there isn't a single standard or a single set of standards that means you can build to 1 or 2 rather than 500. And there isn't an orchestrating and harmonization entity that actually oversees the delivery and holds the participants to account in terms of the quality of their technology. And one of the major problems for Europe is connectivity. So if you can't solve for that, every other problem down the road doesn't matter. If you don't have a functioning infrastructure and a technology backbone that actually speaks to one another, there's no point in discussing how to improve payments. That's the first step. And I think that's been recognized, the fact that the EU and Europe in general is falling way behind other jurisdictions that are moving much more rapidly and also are looking at fixing the instant payment systems across the board. There is a possibility of moving forward with this by embracing this EPA-SPA scheme, but that's looking at more commercial APIs and also looking at how to improve faster payments. But the fact of the matter is there's no mandate from the Commission to ensure that the technology speaks to different components and across the network in a reliable, fast, consistent, measurable way. So that's my starting point in terms of fixing things. Let's start with the first premise of making sure everything talks to one another seamlessly without fail.
So, Ghela, thinking about the European environment, right? Because you mentioned something important in terms of connectivity and allowing one single API standard. But do you think that will be enough to fix the problem that we're currently facing?
Well, there's been a lot of investment in building APIs across the board and not seeing the returns on this. And the fact that we're not seeing returns on it is because there's a failure to standardize. If you're building a standalone API to a specific specification, you're requiring others to make investment to build to that. And they're going to have to do this time and time again, different variations. They're going to have to build an entire portfolio and library of connectivities or API points built to specification. That becomes economically unscalable, not only for the intermediaries, but also for the fintech providers, but also for the banks in terms of testing, going into production with each of those additional providers in the network, which means merchants can't rely on a single intermediary or a single payment service provider. And if they are multi-banked, they also can't get any of their information in aggregate, especially if they use, say, cloud accounting systems that have to build multiple endpoints to multiple different providers. It becomes a problem of scalability. So the investment has not proved return precisely because it's not a scalable system. And secondly, you haven't created a real market that have built that portfolio and library of connection points. And it's because it's really difficult to do. It's really difficult to maintain in terms of upgrades for each individual institution that makes their improvements or upgrades their API. And you have to do that across 10,000 institutions, geographically speaking. Utterly impossible. So the big thing, the obvious thing, and I am going to be Captain Obvious today, is standards. The lack of standards and the lack of harmonization is the biggest problem. If you fix that and you say, all right, we're moving into a new phase of open banking or a new phase of open finance, standardization matters. Let's select 1, 2, or 3 standards, and everyone builds to those standards. That's, again, the first step in course correcting the entire interestingly nebulous experiment of open banking in Europe.
Can I comment on that? Just to say, you keep saying they being the banks. But
I'm talking about everyone.
Yeah, that's what I'm going to say. This is about the ecosystem. This is from the merchants to the PSP, to the banks, to the fintechs. Not everybody in that chain is regulated. So for standards to be adopted and to be followed in the correct way, it needs to be that end-to-end element of things. I mean, PSD2, great example. Issuer said they're ready. Acquirer said they're ready. But parts in the middle may not have been ready. So, do merchants have to become regulated, or where does this actually happen? So it happens. It's the end-to-end flow is where we have to get to, and the controller in that. I mean, and certainly Ireland and the UK, open banking is really slow. I know the UK has an open banking framework, but yet most payments go through the card rails. Ireland doesn't even have a faster payments network. Everything goes through the card rails. So you're building from scratch within that process. So you have to then take this as the overall ecosystem, making sure what's right for banks, for consumers, for merchants, for everybody in the chain of that transaction.
I completely agree. And this is why the fintech providers or the third-party providers are absolutely gagging at the bit for a single standard because they build once. They know that there's that connectivity point. It's not going to be a problem. This is what we're talking about, is that standardization across the entire ecosystem. All participants don't necessarily have to be regulated, but in order to gain entry into the ecosystem or the network, they should be building to a standard.
The real irony here is that the regulators are so fixated on choice, but they don't understand how the different elements of the ecosystem works. So they try and put choice in at the core, at the foundation. And actually the irony is that by having all of this diversity and lack of standardization at the core, actually prevents really good choice and innovation out at the outer edge where the consumers are involved. If there were, to your point, real standard or a few broadly interlinked standards at the foundation, then the level of investment, the speed to innovate on that common platform would be much higher and faster, and we would see much more choice in the areas where it's needed in each individual merchant sector or across each of the different channels where someone wants to make a payment. One of the biggest challenges is that the regulators kind of conflate banking with payments. Banking is not payments, and not all payments are the same. If you put the merchant at the center, you've got inbound payments, and that needs to be set up in a particular way. And you've got outbound payments, and that needs to be set up in a particular way. We've got a lot of very, very confused folks at the moment, and I'm hoping we'll see a little bit more clarity when it comes to future regulation.
Sure.
I think we can agree.
Sorry, I'm just aware of time. So let's change gears slightly and talk about strong customer authentication and the impact on merchants. One of the goals of competitive payments ecosystem is to really create a seamless and frictionless payments transaction. So often questions strong customer authentication. Is strong customer authentication really achieving their role? So Andrew, would you think that strong customer authentication is really achieving their role of mitigating fraud across the ecosystem?
I think it's shifting, where fraud happens. I think it's shifting the tactics of fraudsters. I don't believe it's necessarily stopping fraud. I think some of the sort of very simple account takeover, cases, stolen card numbers in the cards world, that's where it's definitely helping. But, fraudsters, for them it's a business model and they will adapt. And, they, with SCA and even pre-PSD2, there are a lot of payment methods in Europe that were built around this idea of very strict customer authentication. Think of like Ideal in the Netherlands or GiroPay here in Germany. And even those payment schemes where it is very strict SCA from the first cent on every transaction, there has been fraud where, for example, they were fraudsters were installing Trojans on people's phones in order to steal the SMS messages used as the second factor. There were all kinds of very sophisticated types of account takeover there that are it's much more difficult than just stealing a card number, but it's still something you can make a business out of. And so what I think is happens in that case with SCA is that the advantage to the merchant side is, okay, there's no chargeback coming in because I have a full payment guarantee. There's a liability shift completely on the issuer. The issuer needs to deal with fraud, and to a certain degree, of course, they're incentivized to build their own systems in a secure way, but it doesn't completely remove it from the system. And what it does on the other side is it creates a very high friction experience for the customer. And there's cases where that's probably fine. There's cases where if you're doing a one-off purchase for expensive electronics, you're buying an 87-inch television, to watch, the football. You're buying, I don't know, a new car or something like that. It probably doesn't matter. But there's a lot of merchants where they're not able to tolerate that level of friction in their business.
Yeah. Mm-hmm. And what additional changes strong customer identification and consent models need to happen in order to improve that?
Well, let's talk about SCA in terms of how it's applied today. It's about authentication each and every time. It's a reestablishment of that connection with the bank account or with the card. It's supposed to be informed consent along with the security parameters that really authenticate that's the right user. They have permission to make the payment or to access the account. There's something that we forget, which, because we're looking at a frictionless life, that we forget friction can be good. And there may be, I have always thought this is kind of ridiculous, that it may take me an extra 5 seconds to make an open banking or an account-to-account payment at a point of sale. Whereas if I pull out my card, it's instant because, NCF is there and it's automatic and blah, blah, blah. I'm okay with 5 extra seconds. I don't understand this need for speed. I'm not Tom Cruise. I don't buy into that kind of thing. Sorry, bad reference to a very old movie. Shows my age. Challenges, though, SCA is supposed to be increasing security. And again, as Andrew mentioned, a lot of fraud is actual social engineering. It's not within the technical system or the network itself. It's social engineering. And fraudsters will always look at an opportunity to rely on the weakest point, which is the user. It's the human. It's not the system, it's the human. So is SCA the workaround for human fallibility? Probably not. And there have been some arguments around the frequency of using the authentication method actually provides a number of different points along the vector for fraudsters to access the network itself. So more SCA can provide additional entry points for fraudsters. And is it really about removing friction when sometimes friction may be important, especially if we start to look at coupling budgeting or forecasting account information services that provide the payer an idea of what their balance is and what the impact of that payment may be on their overall financial health. Maybe those few extra seconds to consider this might not be a bad thing. I don't know if we've misappropriated the notion of security in SCA with frictionless experience and making sure the two of them are coupled when standalone security is important, but also some friction in a transaction is really critical for informed consent. And frankly, authentication doesn't need to happen every single time if you've already connected to the account or there's a validation point. And to a certain extent, the consent model needs to evolve where the owner of that direct relationship, the provider of the service, rather than everyone in the value chain, owns the consent.
I don't particularly agree with the frictionless issue. Or with friction, you're advocating friction.
I am.
But I think the merchant wants it without friction. That's or most merchants want it without friction. So it's I mean, Apple Pay, Google Pay, they've all been very successful because of that, because they enable payments with authentication without friction. It works very frictionless. Let me explain a little bit more. I think when going into and looking into PSD2 and PSD3 prospectively, I think we all agree there are some items which need revision, which need repair, which we need to look at, and the one item is obviously exemptions and which ones work well, which ones do not work well. It seems that transaction analysis seems to work quite well, and maybe it's an ask by merchants, by the merchant industry, that this be extended, that there may be more or that thresholds may go up. That may be one ask. The other ask is that we need to, I think, from a legal perspective, we need to clarify how that authentication process works, especially if you go to wallet providers, if you go to merchant authentication, which is obviously has been strongly advocated by the card schemes and which has not worked well. I think from a regulatory perspective, we need to clarify that issue. And just quickly putting in some legal insight, the EBA has even recently in January, I believe, pointed out how authentication with wallet service providers works. And that answer the EBA has given is far from being clear, They said it's you can make use of a technical service provider to do your authentication. Then on the other side, you need to be aware of outsourcing regulation, and that's what it is. That's what the EBA said. It doesn't make anything clear. So I think in a perspective, in a PSD3 environment, we need to make sure that strong customer authentication is based on a clear, because we will not get rid of it, because I think there's no way that this will change. But in a PSD3 environment, we need to sort of tidy up the regulation in order to clarify some of those points.
And I think, sorry, just one point on the direction of travel there with regulation, because there is even now talk of doing SCA on direct debits. This was mentioned in this review, and you think, okay, well, right now direct debit has a very clear model. There's no SCA, but also the merchant has full liability. In a commercial use case. So then you say, well, I have this very low friction payment method. I just need an IBAN and some details and accept a mandate. And that works fine. It's extremely cheap, and for a lot of business models, subscriptions and things, this works really well for them. And now, as a merchant, what you have to watch out for, because this is of course why we were all sitting here, is that there's talk of now requiring an SCA for that. So you could have an entire business model that works really well under direct debit, where you have high conversion for your users, and you know how to manage your risk and low chargebacks, and then all of a sudden in a few years you might have to completely adapt now to SCA, which is what happened with cards under PSD2.
And you're absolutely right there. I mean, the base of moving from PSD2 to PSD3 is you take the lens from PSD2. One of the big learns from PSD2, when it came to card on file transaction and merchant initiated transactions, they were trying to fix a problem that didn't exist. And that's the same with direct debits. And some of the ongoing problems still with PSD2 are related to card on file and merchant initiated transactions. So look at what's worked, look at what's not worked, and move forward.
I think also we need to just jump in there. I think we need to be really careful about the messages that we're giving to the consumer, because they're pretty confident about direct debits right now. They know what they're used to. They know what they stand for. And if somebody goes, oh, we're going to have to do some additional authentication here, what's that doing to the basic mindset of the consumer in engaging with these things? Is that a question that we should be asking?
Well, I think there's let's step back for a minute. There are different payment instruments that have different protections, different liability models, and different utility. And all we're looking at is expanding those options for customers, also expanding those options for merchants in terms of what they can accept, are economically viable for their model, fits in with their operational costs, but also allows them to have speed of access to their cash flow. And I think friction, to a certain extent, is important on the consumer end. I think also from the merchant perspective, a little friction isn't that bad. I think it's more important to have functionality like request to pay or payment guarantee built into the model that's saying, I'm happy to actually do this transaction because I know that that consumer will settle with me within this time frame. I'm guaranteed to get paid. I'll release the goods or I'll perform the service. That to me is more important than an extra 5 seconds in terms of how to manage the authentication, the SCA, or the consent stuff. I think we also need to step back and look at the multitude of different instruments. It goes back to utility and what actually works and what matters most. In choice, they're not going to replace one another. There isn't going to be a single payment instrument that rules them all. This is not a Lord of the Rings type experiment. This is diversity of payment instrument for purpose. And if you're on the acceptance side, what particular instruments are viably acceptable given my business model and my need for immediate settlement.
I think that's such an important point.
I'm cautious of time.
Oh, yeah.
I just want to ask if the audience has any question. If so, please make sure to submit on this Slido. We will leave 10 minutes for any potential questions that you have. And then at the end, Matthias will present a topic around PSD3 and strong customer notification. That's basically a recap of the topics that we're covering now. So any questions, please feel free to submit now, and you will take 10 minutes to go through it. Yeah, so I think we talk a lot about, regulators' view and liabilities, right? Because we learned that merchants don't necessarily understand their role when it comes to influencing regulations, and also understanding kind of those regulations that fit for purpose or just rather stifling competition, right? And that's point around strong customer authentication and creating friction. It touches on that point, because how can you build up your process, make sure that first, we're not penalizing good customers, and secondly, you are complying with the regulations. So I guess on that point, I do have a question for Robert around what would be, in terms of the regulator's perspective, how far are we in terms of the expectations in Europe compared to any other country outside Europe, how Europe is developed in that perspective, and anything that would like to add based on your experience?
Yeah, look, we're in the whole element. I mean, certainly when it comes to PSD2 and 3DS2, it was Europe who took the lead on this. One of the fallouts from that has been that fraudsters just go outside the region and cards are being used from other areas on European merchants or vice versa. The regulators themselves also had a level of interpretation. So what was interpreted by an Irish bank may not be the same as a German bank, even though merchants are operating in all these markets and trying to have a single framework. It becomes difficult when there's different, not wrong interpretations, but interpreted different, and different appetites for elements of risk from issuers. There's no doubt. I mean, I agree. In terms of friction is okay for the right merchants. Merchants, if you have a camera shop and you're selling cameras for €1,000, if you have one piece of fraud on one camera, that's likely your profit for the week. So that guy's not going to mind a bit of friction to make sure he knows his customer. I know Matthias is going to present on PSD3, but it is timely to look at now the exemptions, look at what could be used, look at what could be improved, look at what doesn't need to change. We are promised at one point the whitelisting of merchants was going to be one of the big exemptions. It's been used in very, very few customers, even though I may be comfortable with the merchant, I may have purchased from the merchant 10 or 20 times before, I still don't have the ability to whitelist that merchant. I do think the way Europe has gone about on 3DS2 and SCA, I think it will go into other regions. I know Australia is looking at it, Singapore is looking at it. So that sort of legislation will become global. And then friction becomes part of everybody's payment, and we all just accept it in the same way. And there's no doubt, I know we're spending a lot of time reverting to the card networks because that's what works on a global scale at the moment. So, if people get used to being challenged on every single transaction, it then forces the banks to make that challenge a far easier process. Don't make it difficult. Do it in app. Don't send you from one device to the other to authenticate. Do it all in the transaction flow and make it as easy as possible for everybody.
100%. All right, so we do have some questions here. All right, so okay, I can hear you actually there. So Ghela would like to take the first one. What is expected timing for PSD3?
It's going to be a while.
Let's hope so.
Well, no, I mean, frankly, the review process, right? So the consultation process runs typically around 18 months. That's to collect the answers, ingest the answers, come up with some feedback, make a general assessment, and then actually constructing the new legislation. There's also an MEP election coming up. So that delays us yet another year. And if we think about the rate of churn, how quickly legislation actually gets passed, this is a massive, massive review. I'm predicting that it'll be 27, 28 before we actually start seeing what the delivery of that regulation looks like, to be able to forecast it, it's going to be a while yet. We're living with PSD2 as a reality. The problem is, if we don't have the mandate to move to a single standard, or we don't have the mandate for participation, then we're going to see a longer timeline before we even get to the ability for you as merchants to also start maybe even getting some insights into different data sets of your customers, their savings, their investment, their appetite for credit, all of that sort of thing. So if you're thinking of point of sale financing, that's going to be a while yet. You're not going to have access to it as seamlessly and easily as you would under PSD3 or under Open Finance. So it's a while. The problem is does industry want to come together and make the decision to actually converge towards a standard and to start measuring the performance of the APIs and fix the connectivity problem on its own, or wait for the regulators to demand that they do that? But either way, it's a while yet. Look for a good intermediary that provides you that connectivity across the landscape within the domestic market. And if you're interested in cross-border, that's a bigger conversation with your PSP or your payment service provider.
I think this is a really complex question, and it seems really simple. Yeah, what's the expected timing, deadline, and then implementation? What I would say to everybody in this room, because you were all here, many of you were here when we were going through the PSD2 SCA iteration from August 2016. August 2016 to September 2019 seemed like a fairly quick sort of timescale. There was so much work needed to be done in that period. And actually, the regulators had completely underestimated the amount of work that really would need to be done, because it wasn't just about the regulated entities, because we know in merchant payments, we're in such an interconnected, interdependent world. And I see it exactly the same in PSD3. As soon as any form of consultation gets out there, that's when it's arrived, and that's where you need to engage, because unless the regulator is hearing your voice, we're likely to be on the same tram tracks that we were with PSD2, and particularly in relation to SCA, when it was only in the last 6 months before the September 2019 deadline that the world wakened up to the fact that this was an absolutely impractical thing to implement in the real world. So let's start that discussion really early on. And so for me, it's already started. Any engagement you could have with systems vendors who are relating themselves to the regulator, or any possibility of relating directly to the regulator themselves, then get involved and keep yourselves as informed as possible.
Actually, this is really important, because when we talk about the delivery of the regulation, we're talking about the technical standard design, and we're also talking about the experience. And what's missing is the feedback from the users, the ones that actually have to use this. It's not the end consumer, it's the merchant. And your voice is absent. It's fundamentally absent from all of the user groups, the expert advisory groups, the technical design groups. You're missing. And then we come back to you and ask for engagement after we've already sort of designed it and half built it. So if you're not in at the initial stages of these discussions, we're missing a critical voice, a critical point of view, and you're going to end up having to live with what we, the non-practitioners of your world, design. It's really, dumb to let people like me represent a voice that's not in the room. We need you in the room for this. Don't leave it up to me to speak on your behalf in that sense. Get involved with the associations, get involved in those early discussions, give us feedback, because we are practically designing and delivering a system that you're going to have to use. And if it ain't good, you're stuck with it for a long time.
Viviane, can I just jump in? Because there's another really good question.
Yeah, I was just about to ask you that. So yeah, go for it.
I'm going to jump in on that one from Ted, because picking up on what Ghela's just said, yes, we'd love to hear your voice, but there is so much coming down the line that we know that it is almost impossible for you to engage with all of that. So at one level, we're saying, yes, we want to hear your voice. But at the same time, I know that you've got particularly the merchants in the room here, you've got a business to run, and regulation seems way, way, way down the line. So, but what I would say is there are different associations represented here that can kind of cut through all of that and present you with what we see as the right sort of model. Now, you can knock the rough edges off that, and you can be channeled in directly to the regulator as part of that. So talk to your retail trade associations, talk to the different groupings that are around. And it's certainly, as part of the organization I represent, the Legislation and Regulation Forum is what that's all about. We waved the flag in August 2016 and said, and I spoke on this platform in February 2018 and said exactly what Ghela's just said. You've only got, and as hard as this might seem to listen to, you've only got yourself to blame if you don't engage right now. So we know we're going to get a big pile of very, very unpleasant smelling stuff that arrives at the end of this process unless you're involved. So please, please do get involved if you can.
Yeah, I can only echo that based on our experiences with the PSD2 RTS, process. And, I think it's also difficult, from a political standpoint, when we as maybe a payments business are sitting there, saying, okay, we're the ones that are going to benefit from this or that, and then you might have banks that say, well, okay, but I don't earn any money doing this, and if there's no merchant there to say, hey, but actually I want a usable product, that's low cost and efficient and effective and has the same performance as other payment methods, you're not going to get it.
Well, that's actually
of time.
Just a second. I've got one last point. This is
and
critical.
Then I have one more question.
There are misaligned incentives across the value chain for the providers. The one thing that bridges those incentives and recalibrates them to focus on the same direction is you. And if you don't do that, there will continually be this additional friction between the bank, the service provider, and absent you, they're competing, or they're fundamentally competing and going in different directions. You absolutely get them to reorient their incentives to build a functional, useful, practicable system. Yeah. Your voice is missing. So this is ultimately the biggest call to action we can ask for is please get involved in some way, shape, or form so we get your feedback, so we can advocate for a really well-run, well-built system, especially when we're talking about the RTS, the regulated technical standards. It's super important. You're missing, and you're the key to making this all sing.
Guys, we run out of time. Thank you very much for your participation. Now I will hand over to Matthias to go through his presentation around the topics we discussed. Thank you very much. Thank you very much.
Stage is yours, man.